Hello, sixth period Coronado's Business and Entrepreneurship. Today, I am presenting an EDPuzzle for 5 topics. The first topic is types of organizational structure in business. One of the decisions that a business owner has to make is what type of organizational structure their business is going to use. There are 4 main types of business structures in the U.S. Sole proprietorship, partnership, limited liability, and corporation. Each structure has different tax, income, and liability implications for business owners and their companies. So, sole proprietorships are the simplest organizational structure. It is one owner. They have sole proprietorship over the company, and it allows for total control over company operations. These types of businesses are usually home-based businesses, shop or retail, and one-person consulting firms. And owners of sole proprietor businesses are responsible for their own record keeping and paying the IRS in the form of self-employment taxes. However, this type of business provides no protection for the business owners, and they are held personally responsible for the company's financial obligations. A partnership is formed when 2 or more people join or partner together to run a business. Each partner has an equal share in the net profits and losses, and like a sole proprietor, each partner reports their own income on their personal tax return and pays self-employment taxes to the IRS. They are also personally liable for financial debt and obligations. Limited liabilities. They're one of the newest organization structures, and the limited liability structure is considered a hybrid, as limited liability companies can be formed as corporations or partnerships. LLCs can provide owners, who are commonly referred to members under this structure, the protection from liability and other obligations similar to a corporation. Limited liability companies can also be set up and managed like partnerships. The taxation of LLCs also depends on its structure. Due to its limited protection, some companies, such as banks and insurance companies, are restricted from being LLCs. And corporations, they're the last one and the most complex organizational structure for a business is the corporation. This type of business structure separates the liabilities and obligations by company operations from being the responsibility of the owners. Corporations are regulated by the laws of the state they are set up in, and unlike sole proprietor and partnership businesses, corporations are taxed as separate entities. The IRS taxes corporation owners at individual tax rates. There are 2 common types of corporation structure, C and S. The difference between the 2 subchapters stem from different tax rules. Ordinary corporations are considered subchapter C corporations. Subchapter S corporations, unlike C corp companies, can pass income and losses onto their shareholders and avoid paying federal income taxes. The next topic is the business value proposition. A company's value proposition tells a customer the number one reason why a product or service is best suited for the particular customer. A value proposition should be communicated to customers directly, either via the company's website or other marketing or advertising materials. It's a promise of value to be delivered, communicated, and acknowledged. And so Nike's value proposition, for example, it has 4: accessibility, innovation, customization, and brand status. And to calculate your value proposition, you have to first establish the benefits of your product or service, communicate the values of these benefits, pinpoint a problem a consumer could be facing, relate the problem to the value provided by your product or service, and communicate why you should be chosen provider for the product or service. Next is project management, developed by the Project Management Institute. The 5 phases of project management include conception, initiation, planning, execution, performance monitoring, and project close. And project management is the process of leading the work of a team to achieve goals and meet success criteria at a specific time. The primary challenge of project management is to achieve all of the project goals within the given constraints. My next topic is nature of production. The factors of production refer to the human inputs of work to produce the goods and services. It involves the physical and mental efforts of individuals as to convert natural resources into finished goods and services. Management of this applies planning, directing, organizing, and controlling for managing production operations. This process is concerned with the conversion of raw materials to businesses' finished products. The main types of production to choose from are job production, batch production, and flow production. The last topic I have are income sheets, income statements. An income statement or profit and loss account is one of the financial statements a company shows the company's revenues and expenses during a particular period of time. Thank you for listening. That was more than 5 minutes. I'm done.